The Omicron variant, it's not the only thing spreading fear and causing people to sell stocks in the market currently. Inflation is also another, catalyst, a negative catalyst that is pushing people to, into uncertainty, right? Because whenever there is uncertainty in the market, people will tend to remove money from the market, and that's causing a pullback and sell-off. So how can you position yourself now and benefit from inflation, especially since Jerome Powell said that they're going to start increasing rates sooner rather than later, and how to make money off of it, right? So before we jump into those details, let's see exactly first, what is inflation? If you type inflation on Google, simply, this is what will pop first. It's the very first link. In economics, inflation refers to a general progressive increase in prices of goods and services in an economy. When the general price levels rises, each unit of currency buys fewer goods and services, and consequently, inflation corresponds to a reduction in the purchasing power of money. Literally, what it means is, if I have $100 and I can get 10 items now, if in the next 3 months, I can get with the same $100, the same item, only 9 pieces of those items, then the value of my $100 decreased, all right? My money is not able to purchase the same amount of stuff that it used to, and that's because the prices are increasing. I mean, personally, before the pandemic kicked, I used to go to a grocery store for, a week worth of groceries, and I will spend 60 to 80 bucks top, right? Just 1 week worth of groceries. Now, I will be lucky if I get out of HEB or even Walmart with less than $110 for the same stuff. Why? Because prices have increased. Stuff are getting more expensive. And the reason behind it is because supply chain issues. Because of the pandemic, lots of factories were closed, all right? And people were out of jobs. Now, the Fed and the government jumped in to support the economy, and they handed out free money to people, right? Stimulus checks, the stimulus money. With the stimulus money, it didn't incent or, push people to go back to work, because in some cases, people were making a lot more money staying at home than going back to work. So it was a no-brainer for some of them, all right? Now that that money has gone, with that money, it created a situation where people were just swimming in so much money and savings that they had the previous year. So they had cash on hand. All right. Now the factories are reopening, and they can't seem to find the same amount of workers to come and meet the demand, because in one side you have people having cash from the stimulus money and they're buying stuff, but the factories are not open to fulfill the orders. All right. Now the factories are open, but there's so much demand, so many stuff, so many orders. People are still buying that there is not enough, supply to meet that demand. And as a matter of fact, you have what we call those bottlenecks, right? Because even for those factories, those companies, to produce the same amount of goods, they need to have materials. But because the materials are costing also a lot of money, because of, prices are going up, and it causes what we call supply chain issues, right? So it causing you a lot more time, getting you a lot more time for your stuff to reach to your front door by Amazon or the UPS or FedEx guy or lady than it used to, because, we've all seen here, right? So that is the whole explanation around inflation. But the origin on this type of inflation, it's different than what we had back in the 1930s, because this inflation is causing by a heating economy. Heating economy is a good thing, especially here in the US, because 2/3 of the growth of the US economy is coming from the domestic consumption. So if people are still buying, as we saw back in Thanksgiving, even though it's not matching the pre-pandemic levels, it is still a very encouraging sign. Keep in mind that people are not fully going back to work, all right? So that being said, personally, I don't believe the inflation is going to be a bad thing for the economy. It's just a natural thing that was supposed to come after we were locked down for an entire year, all right? So it's going to be, even if it's going to be more temporary than it it is supposed to, I don't think it's going to be a bad thing for the markets. But you can position yourself now and profit off of it in a very good way. All right. So what are the kind of stocks, you can do, you can buy, you can acquire now and get a good, decent gains as interest rates start popping next year, as inflation start, really sticking more into the economy. First of all, you have to look at what we call the CPI, the Consumer Price Index. What are the two major things that are causing inflation or that index to increase? Rent, energy, oil and gas at the pump, all right? So, and then you have, groceries and everything. So if you buy stock of companies that are well positioned to see their profits and their margins increase because of this increase in price, then you will benefit from that. So first of all, I will be buying energy and oil stocks. If you don't know which stocks to get, you can definitely look into any what do we call it? ETF, energy ETF. So XLE is definitely one of those, all right? XLE is definitely one of those you can buy. And right now, what is happening here on the last month, it's lost 4%, right? But there are a lot more stocks, which maybe we're going to get into a separate video on the energy sector. Now, another sector that you can also buy through an ETF or even an index fund or a mutual fund is the XLF, the financial sector, because as interest rates increase, it means the bank will have to charge customers a little bit higher, especially when it comes to loans. And keep in mind that loans is really the bread and butter of banks. So by getting into any type of regional bank, big bank, small bank, you are also positioning yourself well to benefit from the interest rate increase next year. You can also buy stocks from the retail sector, right? The retail sector, I don't know if we can have it here, but the retail sector, this is the real estate, no, nothing to do with it. But the retail sector, it's, anything that has to do with, the Walmart, the groceries, the clothing stores, the Macy's, the shopping, anything where people will still keep buying stuff, but they have no choice because they have to buy stuff, all right? So these are the three main sectors or topics I see benefiting from high inflation coming next year. So the list is definitely not exhaustive, but let me know in the comment section if there is anything that I may have missed. All right. And I'll see you in the next one.